All right, welcome back. As promised, let's look at all the commodity cues that are coming in. Manisha, so there's a recovery pretty much across the board. Which commodity are you tracking?
Well, I'm looking at gold because there's a sharp sell-off that we saw into the commodity markets, but gold clearly had the most of it. In the overnight markets, the maximum decline clearly has come in for the gold prices, where we have seen 2% of a decline coming in, and we did see a 4-week close of 2955 coming in on the charts as well. Well, prices have hit an all-time high, as remember, of 3,167 in the month of March. So from there, the kind of decline that we saw was almost $200 of a decline, and $100 of that actually came into the markets yesterday itself. It's not just about golds. Well, silver prices saw some 0.5% of a gain in the overnight markets, recovering from a 7-month lows, and that's exactly what you have seen for the industrial metals as well. So crude gained, base metals gained, silver gained. The only thing that saw a decline was the gold prices there. That is because the US dollar is off its 6-month lows there, and we've seen that the dollar index gain versus various other currencies. That is what was weighing on. The second thing is that the investors now seem to be turning into other currencies as safe havens, which is US dollar. Obviously, the kind of yields that we have seen, the Japanese yen and the Swiss franc also have gained in the overnight markets there. Apart from that, when you look at the COMEX gold stocks, well, they have seen very strong gains there. There have been gold sales also to set off the losses that we've seen in other asset classes. And gold is the only one that actually made money if you look at the last 3 months. So that is something that is bound to happen and is seen most of the times as well. Coming to the US markets then, the COMEX gold stocks are at a record highs. We've seen them continue to gain, and it is up by $80 billion since the month of November. And you remember, there is no tariffs on gold and silver that has been exempted, and US had been buying a lot of gold ahead of that. So that markets also seem to be easing right now. And that clearly shows on in the LME markets there. Well, LBMA has seen gold inventories gain, even if by a small 0.1%. But that tells you that the inventories are not being taken out of Asia and other parts of the world into US. That scenario seems to have stopped at this point in time. A very supportive factor, though, is the China Central Bank buying in cents of gold, and we've seen that continue for a 5th straight month in the month of March. That report came in yesterday, and Chinese central banks are continuing to buy gold there. Now, where is the gold prices headed? While we have seen a correction of almost $200 from all-time highs, most of the banks and brokerages still believe that the gold has further highs still left it in. The kind of tariff concerns that we are seeing, the recession concern, a lot of data that's also coming into this week, including the FOMC meeting minutes that gets released tomorrow. There are banks still telling you to go ahead and be long on gold. Deutsche Bank's latest report came in yesterday, and 3139 is what they're talking about. 2,900 to 3,300, as you can see, coming in from HSBC, ANZ. The most bullish of all the banks is still Goldman Sachs, Bank of America, Citi. They're talking about $3,300 to $3,500 an ounce by the end of this year. And then, of course, 3,000 is a level that JP Morgan talked about yesterday as well. UBS also talks about 3,000. But many of these markets, of course, will watch out for what happens to dollar index, and a lot of data that is due from US in this week itself.
All right, Manisha, thank you very much for that. So that is commodities in focus. Let's